Okay, so I want to do a quick video on the long-term chart and long-term analysis based on our indicators in TradingView because I've noticed some of you have a bit of a problem of gauging the situation right now. So the setup is straightforward, the same as I showed you in the grand finale. So we have a long-term fractal, E-mini today long-term fractal on at the price. Then we have ET yield 1 and yield 2, so our bond yield analysis. So basically, so here's the situation. We started to get the first part of a signal around end of the March this year, and then it kept on going since July. And recently in November, we got the second signal. So the situation when we have both of these signals, it gives us a heads up that some kind of a major move down is coming down. So I think that this whole move here, based on the history, which I'm gonna get to in a minute, is just something which, you know, is like a prelude to what's gonna happen next. And what usually happened, like not usually, like every time we had these two signals, which are let's call them leading indicators, right? They are not to time the market. The timing of the market is more technical. That's why we have the fractals here. So what I expect to happen is, well, first of all, because we had this first signal short here and the price was in a red zone, that was when I said that, well, it's time to deleverage your positions or to get out of at least half of your stock portfolios, right? Because this is the setup, right? This is the setup to which indicates that there are some turbulence coming. And so technically and fundamentally, this was the signal to lighten your portfolios, but it's not the signal to go short, right? Now, once we get the second one, so we have both are signaling this, historically we know that it can indicate that something in few months is coming, something bad for the market. And this is what actually I think is going on here right now, because if we move to the recent one, let's say here we have both signals, right? So this one joined to this sequence here, right? And we were already above this red zone, so it was extremely overbought, and this is when you wanted to look for shorts, right? And where you look for short is you start to go short here and here. So in the middle of these last two clusters, you do it every time. And a stop loss is above this one, so somewhere here, right? And this is when you want to short the stock market, and then you buy it here and here, right? If we go, let's go through every signal there was, right? So where's the next one? Here's the next one, right? So we have both signals, price getting into the red zone, and we can see that we still have few months to what will happen. Again, this is not this one. So we start shorting here. So this is the moment where you want to get out of your most of your positions on stocks. Like, you don't want to be in the stocks anymore. So this was 2008, right? And then we add here, and our stop loss is here, right? I mean, somewhere here, like, right? This is very similar situation to what we are having right now. But we are at this point, so basically we might still see this, you know, this short squeeze here, this rally, which will eventually lead to something bigger. Let's go further back. Okay, so this is our first signal. We get out of stocks because we are in or lighten the portfolio, as I said, because we are in a red zone, and there's again this push, right? There's again this push. So yeah, this would be hard to catch. We wouldn't catch it probably, right? And then you go along here at the green zones. But the structure of this move is the same. We got first signal, then the second signal comes, and you know, in a few months, market doesn't do any larger rallies above this point, and it just drops in these two huge down moves. But this is the area where you could start building up your stock portfolio again. Now remember, this is Dow Jones Industrial. It's not the S&P 500. So we do this analysis on the Dow Jones Index. Yeah, this is another one. And this is the flat one, but the entry is, and the situation here is the same. We don't have more data on bond yields. So this is 1989, 1990. So again, we have both signals here, right? So we want to get out of this market or lighten our position because we are expecting the last push. So the short squeeze to this point. And remember, we do this. So once we get whichever the signal comes first, this is the fractal that we are analyzing. So no matter that this fractal changed here, or you know, this is our entry point, right? So we enter here, and this is the situation I was referring to in the videos in the grand finale. So we knew that once they got back to this level here, you can start re-entering the market. So it wasn't like a huge move here, but it wasn't like a crash or something. So, but the reason why it wasn't a crash in 1990, I will explain it in the wealth cycle, because there are a bit different forces in play in this macroeconomical forces in play. But still, this is the same pattern, right? So we get both signals, prices in red, and it pushes inside this last cluster, right? The first one is this one, right? And it happens every time, every major every major downturn in the market, it happens, right? So again, that was 1990. This is 2000, right? Again, this is the first signal here, the second signal here, and again, we are in a red zone. We have this last push inside the cluster of sell, and and you got this large monster move down. Then the same situation is 2008, right? So signal, second signal, we're pushing into the red zone. Then we have a short squeeze inside the cluster, the short cluster. We are expecting prices to fall hard, and this is what happens, right? So it's every time. It's like it's the same pattern over and over, and it seems like this one is the present one is the same. So here you have this situation before COVID. So first signal, second signal. So we have both of them. We already in the sell zone. So price pushed a bit further, but no more than this here, and we have a huge move down. And again, we are in the same situation now. Okay. So we had the first signal, we had the second signal. We are at the red, entering the red, and I suspect however this sounds, however this sounds, unbelievable, but based on the history, and as you've seen, it's like every time the same thing happened, we might see the push inside of this sell zone, which is this one, right? It's like this is the sell zone, and this is your stop somewhere here, right? So, and then we will drop to whatever the green levels of the fractals are going to show us, because the targets are not based on this fractal. It's going to be based on the fractal which will emerge after this happens. So from this large perspective, this is, by the way, this is a weekly chart, so one candle is 1 week. So from this perspective, I still think that we might get this push here. So it basically means that we might see new highs again. However unbelievable for some people it might seem, we are still, it seems that we are still before the major crash. Like this wasn't the major crash. This was just the phase before this last push up, and the crash zone is like here, right? The one thing that is different in this case, in the case of this this bearish move, is that we broke below this fractal level here. So we almost got to this point, and this was something that I didn't notice before, that it didn't happen before. So that the drop was like 1 unit of this range lower, almost 1 unit. But again, this will never be like always repeating the same pattern. Like it doesn't look the same as the one before, but the structure seems to be the same. But every time you will notice some differences, right? But because this is for more for portfolios, stock portfolios, or just speculating in this long-term time frame on SPY or whatever you're using to do this. This was this was the signal and the location to get out of the market, or at least lighten significantly your portfolio. But this was not the signal to go short, right? Because again, I posted it months ago on my Twitter. Like, this is the area where I would expect the market to really tank. So in the long-term perspective, I don't think I think it's a bit too risky to hold through this period of potential squeeze up. I don't know, but it's just me. But again, like I said, I can, based on the history which I just showed you, every time we had this major crash last 40 years, we had the same situation, the same structure. So we'll see how it goes. But this was also to explain how to read the current situation. So today we have PMI. It might change the macro sentiment on your macro sentiment indicator, and we'll see if it goes negative. I guess we can have some potential move down in coming week or two. We have a structure, the price volume structure, which is still bullish, and we had a great let me get it to show you this. Yeah, so this is the structure. So as I posted on Discord, this was the buying zone, as these were the trapped shorts, right, in the uptrend. So we got exactly to the lows of this, of this zone, and this was the buying opportunity. Or if we would, break below, then price would get back and move lower again, but it didn't happen. So this was still adding to your longs. Let's get the a bit wider picture of it. Now we are, as you can see, we are in this where is it? Here is it. Oh, here it is. Okay, let's go to 4 hour. It will be better looking. So these are all trapped longs. They are here since, let me go to daily. Where is it? Yeah, these are huge longs trapped here, and this is basically where we are now. So technically, we have some kind of resistance here, and we'll definitely get some action. We actually already are seeing that the prices bounce off this 95-96 level, and we have to price have to move above it to move higher. On the downside, like this is basically again our zone, which will pay some money for sure to get long. But if we break below this zone, we'll get back to it or somewhere close to it. Come on. Right. And then we might go lower, but right now we are dealing with this resistance because we have a huge amount of longs who are trapped and they are thinking what to do now. They are thinking if they should close and break even or wait because maybe we are in a bull market. But a lot of them is going to close their positions, making the price to move downwards with a few spikes down for sure, as it almost always does. So yeah, important thing today is the PMI. I want to see if this will change the sentiment, but on the structure front and the long-term view, bond yield cycle and long-term fractal, this is how it looks like, and this is how I see it for now. Okay, have a good one. Bye.